the outlook remains firm for markets because what you saw actually yesterday, if you look inside the index, it was energy, it was materials, it was the banks, it was the mid caps. Those are all up about 1.5%. And you're seeing this actually spilling over in the European session today too. So there's an expectation that, yes, there's a worsening pandemic, but there's also a vaccine rollout that will accelerate. So this convolvence is going to lead to a certain point where we're going to get a full reopening of the global economy. That's, I think, what markets are anticipating and why the strength in the markets will remain despite some of the political uncertainties that we're, for example, witnessing in DC.
Well, we're seeing some of the indices showing some all-time highs. The Russell 2000, the Dow transports also at all-time highs. We just showed that on our screen. But those in particular are tied to the reopening. The Dow transports obviously also benefiting from some of that work from home play with e-commerce. Which one of these themes do you see taking over until we get the vaccine proliferation and more people vaccinated? We're all going to be stuck at our houses for a bit longer, and there's also a variant. So which one of those do you see being the dominant theme, at least for Q1?
Well, the stay-at-home theme will stay dominant. As you say, we are in lockdowns, and it's in the United States as well. So there will continue to be demand for services when you are at home. But we have to take note of what's happening in the transports and logistics sector in particular, because there's this supply chain that we're drawing from to get the vaccine out there, to distribute it and to get it produced. So I think that sector will particularly be leading. Right behind it will be the banks and will be the leisure and hospitality. I think this is sort of the transition we're making. Transports first, and then banks will take over by the second quarter.
So, Ben, you sent us notes. You had a really interesting theory about Bitcoin actually being tied to the recovery, not only tied to it, but actually influencing it. Can you kind of explain that for us?
It's an interesting development, Frank, because, prior Bitcoin was it's really on its own world. Nowadays, we see a bit of a correlation between Bitcoin and, say, what we call the financial conditions index, which is like a broad index of equity and bonds and commodities. And I find that notable because nowadays it's all institutional money that's getting into Bitcoin and viewing it as an alternative asset class and maybe, taking it as a portfolio position. So I think Bitcoin is becoming for that reason, influential on markets. And the pandemic has shown that the digital services and demand for digital services in general is a proxy. Bitcoin is a proxy for that. So I think that too plays a role. And therefore, the volatility that we're seeing in Bitcoin, which will remain high, I think, could affect markets at certain days. And we saw that at the start of the week, for example.
So, Ben, before we let you go, you mentioned that digital disruption is one of the biggest themes in this 2021 market and 2021 economy. Can you talk some sectors and some stocks that are going to be beneficiaries of that trend?
Yeah, I think it's particularly the e-commerce sector, Frank. That's where, prior to the pandemic, e-commerce was something like 10% or so of GDP. By latest estimates, it's become more like closer to 20-25%. So there's a whole range of, you think about internet companies, but you think about anybody that uses e-commerce. I think that's a big deal going forward. In addition, like digital in itself, all companies have to use now digital platforms to get their customers to their products. So I think that too will be an important driver for markets. For me, it's like a secular theme. And lastly, it's of course just the pandemic affecting the way we work. So the stay-at-home trends will not necessarily disappear, and therefore, despite a reopening, I think in that sector too, you can see a lot of demand for services for stay-at-home.
Shepard Smith here. Thanks for watching CNBC on YouTube.